Tom told me this is about perspective. He said one of the most important things in business is to have the right perspective because your perspective may not be accurate. And you need to have the perspective of the person you're selling to. Perspective is everything. Once you look at it from the other side and you see their perspective, you can tailor your approach. And that makes a world of difference.
In this episode, I talk with Chris Funk. Chris has been investing in real estate for 17 years. He's experienced in wholesaling, single-family rentals, multifamily rentals, flipping, owner's financing, and hard money lending. He's also an avid private pilot and mountain bike racer. We discuss how he got started wholesaling real estate, buying his first rental properties, how he bought his first apartment complex, obstacles he had to overcome, the real estate market, and so much more. I hope you enjoy. Now on to the show. How's it going, Chris?
How are you?
Doing good. Really excited to have you on. We've kind of followed your career going up whenever I got started. So and we've talked a bit at various networking events. You got a great story, and you got some interesting hobbies that we'll get into. But to kind of get started, want to share a little bit about how you got started in real estate, especially wholesaling, and we'll kind of get into the single family landlord stuff.
Yeah, for sure. So it was a lot of fun getting started in real estate. I guess what I miss about that the most is the eagerness, the passion, being so young and kind of seeing the world ahead of me. I knew from the very beginning, after reading all the Rich Dad Poor Dad books, that I wanted to own investments. I wanted to be a business owner. I wanted to have real estate. And I remember going to a couple of meetings and telling people, hey, I want to buy an apartment complex. And they would sit down with me, and the mentor would say, okay, well, how much cash do you have, and what's your credit? And it's kind of just over before it began, right? What's your experience? I was like zero on all of those things, and so I realized that the only place I was going to be able to fit in the beginning was to be a wholesaler and to go out and find deals for other people, and also to develop skill sets that would help me later on. So I actually met a general contractor at the real estate club in Houston and explained to him that I was wholesaling with the intent to be a rehabber and a landlord. And he hired me as a project manager. So it really worked out well because I was able to learn the business of renovations. And he just threw me into the fire pit. We started doing burnouts on day one, and just massive renovations and just horrible properties. And so I got a ton of experience on the construction side. And then what was also nice was when I would go stop by a project, I would go talk to the neighbors, and I would go find out if anyone else had a property on that street or in that area that they were looking to sell. And then when I found them, I could just call our client and say, hey, Jim, we're rehabbing on 123 Elm Street, and I've got 321 Elm Street coming up. Would you like that property? And make a fee for bringing him the deal. So that worked really good. Eventually got fired from that job and became a full-time wholesaler and just kind of dug in. I was the bandit sign guy back in the day, and we buy houses on the corner of every major intersection. I was the
Yeah.
guy that would answer the phone while I was driving, while I was in the bathroom. It didn't matter. If it was a lead, I was going to grab it and go make an offer and try to get the deal. And so that was like around 2006 when I first started putting out bandit signs. And it was kind of neat to see because I feel like we're back in that same environment right now where you have deals are, they sell real quick, and people are just, real estate's hot, and prices are high and that kind of thing. So I've seen the cycle come full circle, but that's how it all began for me was just going to little networking events and trying to figure out what I could do with my limited budget and my limited skill sets. But I had all the drive and ambition. I just didn't have any experience or any money or anything like that. And so that eventually transitioned into one of my buyers kind of got a little peeved with me, and he said my prices were getting too high. And he said, look, if you, how about on this next deal, if you believe in this thing so much, why don't you buy it and I'll just lend you the money?
There you go.
And I guess he figured he could make as much lending me money at 13-3 as I could wholesale or he could rehab in it. So it turned out pretty good because I was now able to make the full profit on the deal. And
Yeah.
I just didn't have a clue. I was like, I don't know what that means doing a 12-3 loan or whatever, but I'll take it if that means I can buy the property. And then ultimately, him and I wound up buying some multifamily property together. And then years later, I bought him out of the company, and so now that property's all mine. But it just started little by little. I knew where I wanted to end up, and I knew that I had to acquire the skills and the experience and the credit and the cash to, excuse me, to get that point. So just little by little, I started taking the next step. And, a lot of times it's just like accidents. Like, he didn't know that this lender that I had, he didn't know that I was interested in multifamily until he was in my office one day and he made a comment about, why do you have certified apartment manager plaque on your wall? He said, I thought you wanted to own property, not be an apartment manager. And I had to explain that I was just going to learn the skills so that
Yeah.
I could hire those people eventually one day to work for me, and I'd know what I'm talking about. And and so and that's it was a funny conversation because right after that he said, my banker's got 20 foreclosed apartments that he can't get rid of. If this is something you're interested in, we ought to go talk to him. And that's how it happened. And it's people say let the world know what you're doing and let people know what you're interested in, what you're up to, because if they don't know, they may be sitting on that opportunity that might be a perfect match for your skill set. And so when you kind of let the world know and you have that passion, that energy, you'll get opportunities, and if you're working really hard, eventually one of them is going to pan out. And that's how it worked for me. Managed to buy my first multifamily property when I was 29. It was back in.
And what year was that?
We started looking heavy at the very end of 2010.
Okay.
So things were still pretty screwed up back then. People were afraid of real estate. Nobody had a job. Everybody was poor. The consumer sentiment was low. People were just, having tough times. But we closed on it the 3 days before my birthday in 2011. And then it took about 6 months to renovate that property and lease it up. And it's a really interesting story. The way this came about was this bank had made a bunch of loans back in, previous to the crash, oh 04, 05, 06, and 07 at those prices. And then when the crash occurred and banks stopped lending and buyers stopped buying, values fell dramatically, especially on single and multifamily for that matter. And so the bank was in a pickle. They had lent out $3.6 million on this property and then taken it back in foreclosure. And then the property deteriorated.
Yep.
They weren't managing it. They had a lot of squatters. They had people in there using drugs, prostitution. It was a real problem for the bank, and they didn't have the bandwidth to manage it. So they, rather than mark, like you've heard, mark to market,
Mm-hmm.
it's not worth 3.6 anymore. It's probably worth $1 million or something, especially after it's vacant and torn up and people have been setting units on fire. I mean, it just has almost no value. It's almost land value.
Yeah.
So instead of write it down to $1 million and sell it, we approached them and we told them, look, this thing's probably worth less than $1 million, and you can sell it to us for cash. We'll go get a hard money loan. We'll renovate it, and then we'll refi out and we'll be fine. But what I'm looking at is the gross potential income for this property minus the expenses, minus the debt service. And then I want there to be enough left over for me and my business partner to have some profit. And so I don't care how we get to that number. If we have to go get an 18% loan for $1 million and then pack another million on there for rehab and then eventually get a commercial mortgage, payment needs to be X. If you guys just want to finance it to me right now at a bare bones interest rate with nothing down and even give me the fix up money and the payment still equals X, that's fine with me. I think rates were about 8 or 9 back then
Hmm.
for investors. And so it didn't matter to me if we were going to go out and do it that way and get a 9% loan and get the payment of X, or if they were just going to finance it to me for 2% interest at a higher price and give me the payment of X, because you can work it both ways.
Yeah.
A low price with a high interest or a high price with a low interest equals the same payment. And so they said, yeah, that's what we'd like to do is we'd like to preserve our capital, preserve that note, that asset. And so why don't you work it that way? Tell us what's the most you can pay with the sweetest terms. And so we went back and forth for a while and eventually came up on some terms and a number that worked. And I wound up buying it for 1.8, which was, I think, significantly more than what it was worth at the time. But I put no money down. My partner put no money down. And we both personally guaranteed the loan. It was more on him than me because he had assets and I didn't. Um, but it worked out really good. They also gave us the money to fix it up. They gave us, I think it was $500,000 for fix up and $100,000 for interest carry. And then it was no payments for a year. And then it was interest only on year two. And then the amortization schedule started on year three. And it was a 25-year loan at 2.9% interest with I think 3 adjustment periods: year 7, year 12, and year 17, something like that.
Which
And
that's an incredible rate, even with the
even
lowest of rates that that we experienced, 2 years ago. Um, to think you got that in 2010 is crazy.
it was amazing. Yeah, and I explained like that's the only way it works.
Yeah.
They had been trying this little scam with several other buyers. They had a doctor that bought it like that and ran away after 3 months. He couldn't make it work. They had an attorney that tried to buy it from them like that, and they just kept repoing it every time. And because people were scared of the asset, I mean, there was a lot of drug dealers, and I had to wear a bulletproof vest and carry a sidearm
Damn.
just to put out my 3 day notices for eviction. And
Yeah. What's
I
that? This was in Houston?
yeah, this is in Independence Heights.
Okay. All right. Yeah. Makes sense now. Got it.
It was a rough deal, but little by little, I got it turned around, and I gave out 2 notices. One is an application for rent. Two is your 3 day notice to vacate. You can
Yeah.
pick one or the other. We need to get you checked out and get you on a lease if you're a good guy. And if you're a bad guy, we need you to find a new home.
Yep.
And it worked. I met the local sheriff, Joe Dana. He's running for sheriff now, but he actually was one of the guys that came out there in the very beginning and congratulated me and gave me his cell phone number and told me to call him if I ever needed help. And we just did the same thing everybody does. We renovated it. We evicted the bad tenants and we put new tenants in. And, we renovated the units that had burned down. And now it's great. It's families and it's a wonderful asset. And so that catapulted me from basically being a one-man show where I had to do everything myself to having staff,
Yeah.
real staff, not just helpers that I'd hire from time to time, but like a real company with real W-2 employees that were there every day from 9 to 5. And so I did have a few rentals before that, but it was just a hassle. It was almost like you'd cringe when you'd see a new deal that was so hot because you're like, oh, that would be so good to buy. But that's one more house that I have to lease. I have to do the work orders. It's
Yeah.
more work for me. So when I got the company, then I realized that I had staff that could help me with things.
And how many units was it?
70.
70. Okay. Yeah. Okay. So that's pretty sizable property.
Yeah, it was enough to have a full-time manager. And of course, that manager would also manage the other rental properties that I had, the single family homes that were all spread out across Houston. I
Yeah.
probably
Yeah.
had 10
You
or
had a little
15.
bit of scale, economies of scale there.
Yes, exactly. Yeah.
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 That's interesting because you did what I didn't do. So on the we I don't know if you knew this, but my wife and I we bought a 29 unit. It was our fourth property, and we bought it as steel. It was like 17,000 a door
Hmm.
in 2012. So 17,000 a door is like crazy, numbers today.
Yeah.
And we put 170 into it, but we bought it so cheap. This was my thesis. I'm buying this so cheap that I can afford to make a lot of mistakes and still make a lot of money. I could afford that. And then if I win, I'm going to win big. So it was
Yeah.
like a 20 to 1 odds. And fortunately and unfortunately, I did make a lot of mistakes and still made money. So that's the good part. But
Yeah.
I ended up having to dump it because I didn't have the partner in mind. I was alone. I went in lone gunman and I didn't have a partner, and that was the key element that all the lenders at the end of the day when we were trying to refinance that they were looking for. They're like, hey, we love you. Yeah, great. I'm glad you got single family experience, but no multifamily experience.
Yeah.
Or hey, it's great, but nah, that asset's too old. Or hey, great, it's actually too small. Or hey, great, you don't have the balance sheet that we would want to loan the loan. Even though this thing was cash when it was like a two plus debt coverage ratio. So,
Wow.
and then at the end of the day, it was like, man, if we would have partnered with someone, that's what you did, and that's ultimately the lesson learned. Like you could have gone the lone gunman, and maybe you could have got it to work, but probably would have been more painful, and may not have been as successful. So for those folks that maybe are like me, want to be a lone gunman, like try to find a good partner. They're definitely worth it.
Oh, absolutely. Yeah. If you need a partner, a key principal on a deal, there's no way around it. But what's great about partnerships, especially if that person's bringing a lot of other skill sets, is that there is a synergy, and there was for me and my business partner because he had a finance background, and when it came to the bookkeeping side of things, he was kind of setting up those systems in the very beginning so I could focus on rehabbing. I could focus on hiring people and putting people into homes. And he was handling the books and all the rest of it. But I was still learning how all that stuff worked. And he taught me so much. I mean, he was really a mentor to me in many different ways in real estate, taught me a lot about owner finance, taught me a lot about strategy, taught me a lot about the stuff that people don't talk about
Yeah,
when it comes down to, you know, dealing with bankers and how that's more of a courtship process than it is a transaction,
yeah. Stuff
It-
that you don't learn in a course. This is
right.
just this is pure in the trenches experience.
Yeah, exactly. He's like, look, if you want to do business with a banker, go over there with a cashier's check and open the account. Put 50 or $100,000 in this guy's bank and let it sit there for a couple months, and then call him and say, "Hey, I'm looking to start a banking relationship with you. I'm a real estate guy, and I've opened an account there." And now he's going to pull up your account and say, "Oh, wow, that's great. This guy put a bunch of cash in here," and because that helps bankers to make more loans.
Yep.
And and you learn how to talk to a banker. You got to realize they're very sensitive. They're very conservative. They don't want to lose money. You have all the upside. They have no upside on your deal. All they get is the interest. So he explained it's about being conservative and and understanding that and understanding the kind of the way things really work, but you'd never read that in a book.
Yeah.
Um,
Yeah.
so yeah, maybe I could have pulled that deal off myself. I don't know, but it was his contact that had that deal. It wasn't my contact, and he kind of pushed me. I was a little bit afraid personally guaranteeing this thing at 29, and if it didn't work out, I mean, I didn't have much that they could take, but I had a house and a car, and I didn't want my credit ruined. So
Yeah.
it was nice to have someone there, even if it's just for you know, the support in the beginning.
Yeah.
When you're doing something scary and you have someone that has been down that road before, and it was his first multifamily property as well. But I think it made a big difference to have the two of us go in there. And now I feel confident. And, I was in the same boat as you. I try to go get loans, and, they just kind of look at me like, why would I want to loan anything to you, man? And then I realized you got to have a personal financial statement. Here's what it needs to look like. And little by little, I started to realize, and learned a lot of really good things. Eddie taught me a lot of really good stuff on how to deal with banks and put together a portfolio, a little resume about yourself. And he said bankers love that sort of thing. They can show that to the board and the loan committee, and look at this guy and all the time and energy he put into showing us about him because he's not here today. But here's this little booklet, and this is everything about the guy.
Yeah.
Page 3 is his tax returns. Page 4 is his credit report. Page 5 is his criminal history search. Here's all the people that work in his company. Page 3 is his personal financials. Here's photos of properties that he's done, rehabs he's done. Like, you can real quickly get a good look at this guy and understand who he is, and it makes a huge difference versus some guy who's just knocking on their door saying he wants a loan. You
Yeah,
know.
yeah. No, I've done that also from Eddie. Learning from him. And for those who don't know, I mean, this guy's like a local legend. He's bought thousands of houses. But I remember bringing that packet in, and they're like, they kind of look at me funny, like I never saying like, no one ever gives me a package this clean, like.
Yeah,
And it was kind of astounding to me. I was like, why wouldn't you? But there's a lot of sloppy operators out there.
it makes a big difference though, and I think probably the biggest thing. Tom told me this, and it was about perspective. He said one of the most important things in business is to have the right perspective because your perspective may not be accurate. And you need to have the perspective of the person you're selling to.
Yeah,
Perspective is everything. And once you look at it from the other side and you see their perspective, you can tailor your approach. And that makes a world of difference whether you're trying to go out and buy someone's, old rundown property. You need to know their perspective, what
yeah.
matters to them, what their concerns are. If you're trying to borrow money from somebody, you need to know what their perspective is.
Yeah. And make their
Because,
jobs easier by giving the stuff up front so they're not having to hunt for it. I've told, and you've probably experienced this too with rentals. You get a rental application that's like half filled out. It's all chicken scratch. You can't read the other half. And they didn't submit this, and this, and you're having to chase it down. I'm like, agents, look, if you want to help your clients, like have everything to go, like ready to go. Like that puts your client in a position to win, not
yeah,
not kind of aggravate the landlord.
yes. And right now it's easy to win because we kind of have this new culture of, we barely do nothing Mondays or whatever it is. So I feel like nowadays people can really stand out by doing the stuff that you and I are talking about. And because it's not so many people do that, but the winners do. And that's kind of always been my policy is to tailor and craft my approach to the person who I'm trying to sell to or buy from.
Yeah.
And and that just makes such a big difference. But that went well for me, and it took a little time to get that property straightened out, and I definitely took some time off after that. I did quite a bit of traveling. I did a big Europe trip uh, after I got that property stabilized. I think around 2012. Well, yeah, that'd be about a year after I bought it. That was when that summer I said, okay, I'm out. Y'all got this thing. Y'all know what's going on. We got it leased up. Just don't let it burn down. And I did tons of fun. Uh, went to the Grand Prix in England. I went to Croatia, France, Greece. Just had a great time. And when I got back, everything was just as good as when I left. And that's when I knew, like this what they said. It's
Yeah.
exactly what they promised me.
Yeah.
You can
Yeah.
own this business. They'll give you direct deposits while you're out of the country. When you come back, everything will be just like you left it.
Now, could you have done that if you had a wholesaling or flipping business?
I doubt it. I mean, I'm sure there's some people that have got their business set up like that, but I think it's a lot more difficult because you can't go. I mean, maybe now it's changed, but you go out to hire an apartment manager. There's 421,000 search results that come back for apartment manager. It's on their resume. But if you put wholesaler, there's not that many people that are in the wholesaling job.
Yeah.
It's just not a apartments are like a commodity. There's hundreds of thousands of people that you can plug into that business and they already know what to do. Wholesaling and rehabbing is just not that way. It's as a business, I feel like it's more in its infancy. So I think there might be some people that have done that, but it's more difficult.
Very
Apartments are
few
just
in my experience.
few. Yeah.
Very, very few. And beyond that, I'd say almost everyone that I know has tried to scale. Now I'm talking flipping here, not wholesaling. Wholesaling, I think, is probably easier, but flipping. Everyone that I know has tried to scale a flipping business, either scaled back down because they realize, hey, like this is insane. I'm one of those, or they checked out, like gone. Either they said screw it, or they went out of business. Um, there's really only two that I can think of that's really been able to push it.
Yeah. Well, I think that there's just so many decisions that have to be made
Yeah,
with a
and they're
business
very
like
impactful ones. There's a lot of
that.
money moving around.
Yeah, yeah, really a lot of really tough and complicated decisions. And I think that's what stops it from being an automated business where the apartment business is very automated. If they don't pay, you do this.
Yeah.
If they do this, you do this. It's just a systemized industry now, and it was great. I loved it, but I like you. I wanted to get back to wholesaling and get back to buying property again, and I wanted to do it in a passive manner. So what I did was I had two employees in the office at that time, a manager and a leasing. So I took the manager and I started running leads again. And I would have the manager help me clear title. Hey, I need you to call this guy and find out who his heirs are so we can get this heirship affidavit, or something. And then eventually I'd say, hey, you go out and look at that property and meet with them if they're there, take some pictures. If I like it, I'll go talk to them. And that was working well. And then eventually, I think she just came back with a contract signed. And I hadn't even, I was like, yeah, see if they'll take 20. And she came back. She goes, yeah, they said yes to 20, and I got them to sign this. I was like, wow. All right, let's do that again. Go ahead,
Yeah.
do the same thing. I don't even need to go anymore. And that worked out great. And eventually had a couple people doing that for me where I could still own the apartments, still do wholesaling and rehabbing and buying rentals, but I didn't have to be answering every call, in the shower or whatever, or hopping in the car and leaving lunch to go look at a property. And, I had people that were helping me. So that made a huge difference. And the strategy was anything that's awesome, I'm keeping.
Mm-hmm.
Anything that sucks, I'm going to sell
Yeah.
wholesale. And the stuff in the middle, I'll just figure it out. Maybe I'll keep it as a rental. Maybe I'll keep it because it's a good owner finance. Um, Maybe it would make a great flip, but it just wouldn't work as a rental or a wholesale because it's occupied and they're skittish, so I can't wholesale it. But that was my model. The very best rentals, anything subject to, take it down as a rental, and that worked for a while. And then I wound up switching again. That employee left, and then things just got so tight where it was so tough to market and get a return. I'd put five or ten
What
thousand.
time frame is that now?
This probably started in 2018.
That's what I would
Started
have said.
getting.
Yep. Yep.
Is that for you about the
Yeah. Well,
same too?
because so we flipped 200 houses or so, and we've held a few here and there, and then along the way realized like, hey, we built a really crazy job for us. It was fun for a while, but now it's a job. So we need to go the passive route. And so, but it was 2018, yeah, when we decided, hey, let's start holding more, flipping less.
Yeah.
Uh, and while that model made sense under prior data, the market had changed. So it was far fewer that same model in 2006, 15 through 17. I mean, we could have held probably 3 out of 4 deals or 4 out of 5 deals. But it starting in 2018, it was like less than 50%, and quickly deteriorating.
Oh yeah, that's exactly the same thing that I saw. It was tougher to find deals that made sense. It was tougher to get the deal. There was a lot of competition out there. And so I just quit doing that. Started doing a little bit of hard money lending. Never done a whole lot of hard money lending or private money lending, I guess. But it just got to the point where it was more trouble than it was worth. I was spending massive amounts of money on marketing and not getting a deal, you
Yeah.
know? So I said, well, I don't need to do that. If it's not working, I don't need to do that right now.
Yeah.
The cash flow from the rentals is enough. And I have a lot of other stuff I like to do, and I feel bad for people. I love business and I love seeing people succeed, but I feel bad for guys that tell me that, real estate's the only thing they do for fun. I'm like, man, you're missing out. There's a lot more fun stuff to do than just real estate. I mean, I'm never going to quit doing real estate, but the guys that work 18-hour days, 7 days a week, and the grind guys or whatever. And I'm like, don't get me wrong, I'm also working that much. It's just not always on real estate.
Yeah,
It's
there's a season for that. Like when you were talking about taking
yeah,
calls in the shower and all that, like that's fun for a minute.
oh yeah, I've done that. Yeah,
Yeah, on call 230 for the week. On week, 64.
yeah,
It's not as fun.
yeah, exactly.
uh,
Yeah,
yeah, I mean, it's one of those things. Yeah, the first pie tastes good, but after three or four, you want to break. So, but you built out a team, and that was it. You were able to preserve your enthusiasm for the business because you were able to find the team and therefore move into different areas of the business as opposed to being stuck in the trenches the entire time.
that's a great point. Yeah, I got burned out wholesaling, and then I was rejuvenated when I became a wholesaler that didn't have to see the property. It
Yeah,
changed everything. Now I was excited because they were doing the hard part or the part I didn't want to do, and I still got the fun part, which was seeing the contract, sizing up the deal, salivating over the deal, and then closing the deal and figuring out how I'm going to exit the property and or what I'm going to do with it. And I loved that. I loved running the comps and going, oh my gosh, this thing's going to just be so good. And I don't have to go track down the heirs to the heirship affidavit because that part's not fun.
yeah,
And it made a huge difference because I still love it. The thrill of the hunt and the art of the deal. That stuff's awesome. That little bit of anxiety that you feel, waiting to see if they're going to show up to closing, and they're kind of maybe like a little bit of a sketchy seller and you're not sure, and there's a lot of equity and you're wondering if, and
yeah,
then they show up and you sign and you're like, man, what a terrific deal I just did. Like, that's a wonderful feeling. I love that feeling.
yeah, yeah.
And I miss that feeling, because I haven't been doing any purchases or anything for quite a while now.
Worrying about that brother-in-law in prison who he's holding back a signature.
Yeah, we found him in prison. You got to use the prison notary. You can't use your own notary. You got to use the prison notary. We figured that out.
Oh, geez.
Uh,
So, I
yeah,
mean, you've got some perspective, though. I know you have some thoughts you probably want to share on the current market, but you've gone through some market cycles.
yeah,
I mean, you started in 2006, so you definitely were in before the. I mean, actually, well, let me rephrase that. You've gone through multiple historic events. 2008, and
yeah.
then because most of your business probably is in Houston, three historic floods, and then a pandemic. So that's a lot to take in and still be standing. I don't know. You're like Rocky Balboa. What would you say going through those events like and coming out and not just surviving but thriving? Like, how has that made you a better investor today?
Yeah, it's really good. Every time you get in the boxing ring and somebody knocks your lights out, you remember that, and you remember where that punch came from, how fast it came, and what it felt like when it hit you. And then you adapt and you realize I need to move out of the way if
Yeah,
that
yeah. I don't want
happens
that to happen
again.
again.
you know, and and so that's what it's done for me. And I've realized, moving out of the way in real estate, it's about having cash. That's how you dodge a punch in real estate is you have cash on the sidelines. And when you can't collect rent because there's a rent moratorium or an eviction, um, you got to be able to pay the bills. And so that's one of the first things I've realized is that your front line against these things that come at you is having your deep pockets, having that money set aside, and not distributing that money to your business partners or to yourself, not going out and buying a Ferrari or, whatever. And I have so many friends that do that. They get some cash in their account, they go buy a new car.
Yeah.
And
It's like having, I mean, a business is like an infant.
yeah,
I don't know if you have kids, but it's like an infant, and babies need to eat a lot very
yeah,
frequently. And relating it to business, it's like you're sucking all the milk. Like when you're sucking all the milk, like you can't do that. It's gonna really negatively impact the health of the baby. You can't do
yeah.
that with your business too. You can't be making those distributions to yourself because you want to go on lavish vacations and you've only wholesaled 4 houses and you want to grow this great big empire. Like it doesn't work that way.
Yeah, and you always have to, I took this from gosh, what's the guy that owns the Rockets and the all the
Yeah,
restaurants,
yeah. Fertita.
Fertitta. And he said, look, when I pencil out a deal, I always pencil out worst case scenario. And if I had to sum up my strategy, it's always been that, which would probably make sense if you've seen my views about the economy. I'm always looking for the worst case scenario. But if it works and if you can get by on the worst case scenario,
It's
then
all
you're
upside.
probably going to be fine.
Yeah.
Yeah.
Everything else is upside.
Yeah. And that's kind of the way I live my life. Everything I do, I'm predicting the worst case scenario and I'm training up for that. And if that doesn't happen, well, then I'm leaps and bounds ahead of the next guy because I was prepared to show up and have everything break, and I got backups, and that's just been my whole position towards business. And then the other part of it is, when that event comes that you maybe didn't expect, is just get to work and use common sense. If you got a bunch of floods, well, you got flood insurance. Go fix your houses, get them rehabbed, go talk to the tenants, go buy some more flood houses that are cheap. If they're on sale for 40 grand in a $120,000 neighborhood, go buy a bunch more of those. If you get sick of it and you got a house that's flooded more than once, sell it. And I've had to do that. I had a house that flooded in Harvey and never flooded again, kept it. I've got one house that floods every time but Harvey, sold it. You just common sense, I think, is the biggest thing. But back to the market shifting on you. The first time it shifted on me was 2008. I was a wholesaler. I had my own home and a car, and that was really the only thing I had. And this is back when there was fax machines, and so all of a sudden the subprime collapse happened. Everybody knew about it. Hard money lenders kind of closed up overnight. And I had probably 10 wholesale deals on the market, sending out emails, putting them on websites and stuff. And overnight, people stopped calling me. Before you could throw anything out there and it would sell, you could make the numbers up and it would sell. Overnight, people stopped calling back. There was no activity. I had to extend my contracts with the sellers, explain to them what was going on. And then I just started calling people. Common sense. Start reaching out to people. Reached out to a realtor. He said, well, hey, maybe I can list some of these houses for sale. I don't think he understood that I didn't own them, that I was just wholesaling them. But regardless, he listed a few for me on the MLS. And I was out of town that weekend. And my roommate called me and was like, hey, the fax machine's out of paper. There's paper all over the floor. I don't know what's going on. It won't stop. I said, well, put more paper in and read me the paper on the floor. And he said, well, it says 1 to 4 residential contract.
And
He's
for
like,
anyone out there that if you don't know what a fax machine is, it was this little box that kind of like an email, but instead of looking at it digitally, it actually printed the paper out for you.
that's right. That's right. And those were offers that were coming in on the fax machine, one after the next, after the next. So here's what happened. The local guys in town got scared, quit buying.
Mm-hmm.
The hedge funds were sitting like a sniper, waiting. They've
Yep.
been waiting for years. They had a full clip. Their sight was teed in on the target, ready to go. And so as soon as I started putting properties on the market at a certain price per square foot in a certain zip code that hit their little algorithm, and their agents came out of the woodwork.
Love it.
And this lady said, "We'll buy all three of these. Do you have anything else?" I said, "Yeah, I got like eight more that I haven't listed." She said, "Send me the address and the price." And I sent
I
her,
think that's what happened. And we were talking about 2018 and how the market fundamentals for rentals, it just really went out of whack. I think that's kind of what happened because of the flood events that Houston had. I mean, we had, I think, 3 out of 4 years were historic events. And I think that brought, especially Harvey, brought in, there's so much outside money buying up these flood houses, whether they knew what was going on or not. I don't know. That was just my opinion on, or my observation on
yeah,
it wasn't the only thing at play, but it definitely was a big catalyst.
it was a big catalyst. Yeah, it changed a lot. And I think that you got to be careful what neighborhood you buy in. If that neighborhood floods every
Oh,
year,
I bought some of them. I bought some of them that went to back to the hard money company.
yeah,
This one out, it was Arizona or New Mexico, some outfit. They weren't a hedge fund. It was some investor. You got way too much in front of the skis, and he had like five or six. And this national hard money company reached out to me, and I knew them, and they're like, "Hey, look, here's our sheet. Let me know which ones you want, and we'll finance them all." So
awesome.
I think I picked three, and I wholesaled one, meaning I closed it, immediately sold it. I think another one I put on MLS and sold, and then another one I kept as a rental and got a huge payday after just renting it for 1 year. Um, yeah, those were good deals. Back to the very beginning, we were talking about relationships with banks.
Yeah, yeah,
Yeah,
yeah,
I knew
exactly.
them, they knew me.
Yeah, yeah. Having a banker really changes the game. It's the unlimited, money supply from one guy. And that just makes a huge difference. Not having to unlimited cheap money essentially. Um, but yeah, the Harvey changed a lot. I definitely bought a few deals during Harvey, but I didn't really want to buy any of that stuff in Meyerland just because I know that area just
Yeah,
floods so much.
it's a swamp.
Yeah, it is a swamp. So I steered clear of that, but I did buy some stuff on the east side that's turned out really well, and the appreciation is amazing. And I really missed out a lot by
I think
stopping.
the Addicts and the Barker Cypress area. I think the uh, Cinco area. So there was a lot of people paying crazy prices. I thought crazy prices in hindsight. Like those are probably steals for if they would have kept them and rented them at least.
Oh God, that was a wonderful area. Yeah, all that stuff that flooded out there because I think they fixed that dam now, or they're not going to
Yeah.
release it again. If you bought anything out there that was a flood house, that was probably a smart move. Um, But the crazy thing is all the appreciation that we've seen in the last 5 years, which is when I stopped buying.
Yeah.
Had I went out and bought 100 houses, another 100 houses, you know, I'd be in a way different position today. But you never know what you're going to get into. And part of my fear of the market is what I actually did for that hard money lender, that private lender that I wound up partnering with to buy the multifamily. Well, before we did that, he was an owner finance guy, and he had been owner financing in the early 2000s, and he got a bunch of foreclosures back in 2008, a whole bunch. And I would go out and sell those for him. I would either wholesale them, or I would go out and find an owner finance buyer for him, put the deal together, and then he'd pay me for finding the buyer. And it was so difficult because he owed so much on these houses. And I was trying to explain to him, look, your numbers don't work. I don't know why you bought this, and I don't know why you paid this price, but I can't sell it for this right now. The market's in the gutter. And time after time after time, I would just try, and sometimes I could make it work. I could get it sold at the number he needed by adjusting the down payment or the interest rate, or just pushing for more buyers until eventually I found somebody. But there was a lot where he'd throw in the towel and say, "Okay, rent it. I need to get 1,400 a month for this thing to cover." And I'm like, "Look, dude, this is an $800 rent neighborhood. I mean, what do you want me to do?"
Yeah.
And he was getting smoked. He had probably 20 or 30 houses like that. And I saw him each time I'd book one. He'd tell me, I'm losing 500 a month on this house. Next one, I'm losing 650 a month on this house. Next one, okay, I'm losing $50 a month on this one. But he had to get him moved. He had to do something with him. And I saw that guy just get completely taken to the cleaners. And so when I started seeing prices appreciation in 2018, I thought, man, this can't go on forever. I don't want to be like that guy.
Yeah.
I don't want to buy a bunch of stuff, have the market crash, and then I can't get what I need out of it. But there's some things you can do. He had all the 5-year balloon style loans on his
Yeah.
properties.
Yeah.
So his interest is only fixed for the first 5 years.
Yeah. Yeah.
If you do that, you're in danger. If you get a 30-year loan right off the bat for your rental, you might pay a little more interest, but then you don't really care what the market does. And if you do rentals instead of owner finance, you don't care what prices are. You just care that someone will rent it from you.
Yeah, yeah.
So
I think that's a vulnerability that I do get, that rental properties in general are more wealth building plays, not cash flow. And in general, owner's finance is a bit more of a cash flow play, but otherwise it's depreciating asset. But the vulnerability to owner's finance is the foreclosure, and also mitigating the downside risk from an insurance perspective, on the property condition whenever you foreclose. Because if it flooded and you didn't require flood insurance and you foreclose, like, yeah, you got the property back, but now what?
yeah, exactly. Yeah, there's a lot, and I've been on both sides of an owner finance deal that goes bad. I've been on one where it had appreciated so much and they quit paying. And I asked them if they wanted to just deed it back to me in lieu of foreclosure, and they said yes. And I said fine, kept it as a rental, and I got all that appreciation. And I was I was sad that they lost their home and they had to move and couldn't make it work. But financially, it was a big win for my balance sheet because it had appreciated so much and they had paid my loan down so much. And then I've been on the flip side. I got one right now. We're in month number 13 of this guy's third bankruptcy.
Jeez.
He hasn't paid me in over a year, and I sold it to him at the top of the market. So now I got to foreclose, and
Yeah.
it's probably going to be worth half of what he owes me. I'm going to get smoked on that deal. I'm going to lose 100 grand, but maybe I'll rent it out for 20 years and not lose anything.
Time does, if you can sustain it, time heals most, not all, but most wounds in real estate. But
Yeah.
you do have to be able to sustain it. So switching gears, I've got a couple other things I definitely want to hit on before we wind up.
Yeah.
The market outlook. I mean, you got perspective from 2008 from your business partner with a hard money lender. You've kind of saw some winds changing in 2018. Here we are, 2023. When every single year, like you, I've heard the market's going to crash since about 2017, probably. It's too hot. It's going to crash. It
Right.
didn't. Kept going. And then the pandemic happened and it's just like freaking rocket ship. Now here we are, 2023. There are cloudy skies. I don't think anyone disagrees that the market's a little cloudy right now, a little uncertain. But how do you see the next 12 to 24 months shaking out as far as real estate's concerned, home values, and at least from an investor perspective?
Well, it's really hard. And I'll tell you why it's really hard to predict. And it's because we don't really have pure economics. If it was pure economics, everyone would have been right already. All the crash bros would have been right. But we kind of have this hybrid system with the Federal Reserve Bank, and quantitative easing. And so what winds up happening is instead of having this pure market where buyers and sellers meet at a price, that has a lot to do with supply and demand. That's a typical market. We have these market distortions that are created by the government printing money and the government adjusting the interest rate. And so I feel like when you heard guys saying in 2017, 2018, 2019, what they were saying about maybe a potential crash was, hey, based on economic principles, we're headed into something bad. The reason they were wrong was because the federal government was able to push that inevitable crash off into the future by manipulating the market and distorting the market with interest rate manipulation and money printing. So when you ask me, what do I think is going to happen in the next 18 to 24 months? I say it all depends on what the Fed does. And so then you've got to look at the Fed. What are their options and what are their objectives? And so that's the wild card that we don't know
Yeah.
because
Which they've
supposedly,
stated their objective is 3% inflation. And we're much higher than that now, but they've stated, hey, look, we're going to get this down to 3%.
or 2%, I've heard.
Yeah.
And so, right. But you got to question the guy. Does he have other motives? Are there political motives? Are people
There's
leaning
always political motives.
right?
Yeah.
What about his legacy? Does he want to be remembered as the guy who broke the back of inflation and saved the country?
Yeah.
Or does, what? There's a lot of considerations, but legally, the Fed only has two mandates, and that's price stability and maximum employment. So if we go under the guise that the Fed is what they say they are, then we've got to get inflation down to 2%. It's at about 10 right now. If you measure it on the CPI, it's at 5. And so if we're saying CPI measured inflation has to be 2 and we're at 5, they've got 3 to go or 2 to go. And in order to do that, they're probably going to have to keep rates as high as they are right now for a while. We've got
Meaning
to
not necessarily, maybe not raise much more, but more hold.
we've got to hold and see and then see what happens because all the stuff we did last year will feel the effects this year and
Yeah,
next.
yeah, it's a delayed effect. I've
Right.
heard 9 months or so typically for it to permeate.
Right. So if we were to pause and wait and inflation was to go to 4.5 and then stabilize, then maybe they kick rates up higher and see if they can get closer to their goal of 2 or 3%.
Yeah.
So only time will tell. But I think one thing I do know, if you tell me what the Fed's going to do, I can tell you what the market will do.
Yeah.
Because it's a puzzle.
But the Fed's not the only. It almost seems like the Fed, they've got their agenda and they've got their objectives, but then you have the federal government, i.e., Congress, the president. They've got very much some aligned, but also very different objectives. Some short-term elections, and then some long-term, which printing money, like raising the debt ceiling, stimulus packages, extended unemployment, employment. I mean, I know the pandemic, that was a very unique situation, but there was a lot of money, like helicopter money going around. So it's almost like the government's not helping the Fed with their objective, and it's like I don't know. It's almost like this battle. Will that wonder how that'll sustain as we get into a presidential election?
It very much is a battle. The federal, the fiscal, and the monetary are fighting each other.
Yeah,
and one of them is undoing the work of the other.
Yeah, it's like if you stop
difficult.
printing money, it definitely helps pull things back in.
Right, but then you got the guy who's trying to decrease the money supply, and you're over here increasing the money supply. So the only thing he can do is make the money more expensive. So, short answer, if they keep the money expensive, we'll have a crash. And it'll start with commercial real estate. It'll start with any real estate that does not have fixed debt, simply because you can't refinance out of a property at a higher interest rate on a price that was predicated on a low interest rate.
What is assuming rates stay roughly where they are now, up plus or minus maybe a half a point? What does crash look like to you? And you mentioned commercial. So what specifically in commercial?
I think it's going to be all commercial real estate that has debt maturity that's going to occur while rates are elevated.
Okay.
I don't care what kind of property it is.
So whether office space, industrial, multifamily.
in single family. If
Yeah.
if you have a rental property, let's say that there's 500 rental homes in Houston that are on balloon loans that are going to balloon next year, and they can't refinance at 9% and still cash flow, they'll have to all go on the market.
Hmm.
And if they're all rental properties being sold as a package, the only buyer for those properties is going to be another landlord who's going to face the same problem that you're in. They don't cash flow at 9%. I'll give you 60 cents on the dollar because then they'll cash flow.
Hmm.
And so but that's not a huge part of the market for single family. So single family is mostly fixed rate loans for 30 years by people that live in the homes. So the market can go to hell and they'll just be sitting there paying their mortgage, not even aware of what happened.
Yeah.
It
And
just
then
doesn't.
also 99% of single family is at less than 6%. It's like 70% or less than 4%.
Right.
Like there's ridiculous that goes into inventory now. So going in, if you're sitting at 3.5%, like you're probably going to die in your home. Like you're never going to sell that thing.
Go and try. Absolutely.
On top of like, they just weren't building enough over the last, 10 years.
Right.
So I've heard that argument as well. It's like, how can we crash a market that's so undersupply? Whether we're 4 million or 6.5, which I think NAR HUD said we're 6.5 million homes under supply. I've heard higher numbers. Um,
Well, the fallacy with that argument, in my opinion, is you're assuming that demand is a constant. And that would be true if demand was a constant. But supply means nothing if the demand falls off a cliff. And supply means nothing if unemployment is 10% and no one can make their mortgage payment. So I don't think single family is headed into a crash this year. I don't think it is headed into a crash next year. We don't have that subprime immediate,
yeah.
lightning crack that's going to send us
Yeah.
off a cliff.
And
But
there's a lot of equity, built into those homes.
oh yeah, right now most people are in a great position to sell, and they're not. Yeah, if you bought 2 years ago, you have equity. But what I do think will happen with these high rates is it hurts the commercial side for the reasons I mentioned. It hurts the stock market big time, and the stock market is, I think, 50% of our GDP. It's a massive amount, and it's where everyone's wealth and savings is held. So if they keep the rates up, the market's kind of hoping that there's going to be a pivot soon. If the markets find out there's not going to be a pivot and we have a big stock market crash, then I think we're headed for tough times. Powell has said in a roundabout way that he needs to get inflation to 10%, or I'm sorry, unemployment to 10%. We're at 3.5 right now.
Yeah, we're far from that.
We're far from it. But he basically said in a roundabout way, we need to be at 10%. If we get to 10% unemployment, single family will absolutely suffer.
Yeah.
FHA foreclosures, or sorry, FHA delinquencies are already at a higher rate than they were in the first quarter of 2008.
Mm-hmm.
So I do see trouble brewing for single family. And if the unemployment starts to go up, rates stay higher for longer, you start seeing more foreclosures in multifamily, more pain in the stock market. And then the final draw is the emotional side and news headlines. Because as you know, most people are too busy to think about this stuff. They keep their head down, they go to work, they feed the kids, and they go to bed. But if they turn on the news before they go to bed and it says that the real estate market's bad, oh, well, I don't want to buy a home because it's bad.
Yeah,
I
yeah,
won't
yeah.
buy a
Market
home
sentiment.
because it's
Yeah,
bad.
market sentiment's real. I mean, it
Right.
does matter.
Most homeowners want to buy when the price is sky high. That's when most homeowners feel best. When the price is just out of sight, that's when they rush out to buy a home. It doesn't make sense to me, but that's typically when people love to go buy a
Yeah, yeah.
home.
But that's when
When
you get
homes are
excited.
on
That's
sale,
when
when
we
they're
get excited.
practically giving them away, you can't get anybody to touch real estate, And so it's kind of opposite of how I work, but I understand it. People think if the bad market, the news says it's a bad market, then people won't buy. But that'd be the final straw is the consumer sentiment. And if you start hearing about massive layoffs, companies going out of business, you start seeing foreclosure signs in your neighborhood, that's when I think single family can run into a problem because single families price at the margin. If there's two, three foreclosures in your neighborhood, next thing you know, all the values start to go down. And then the third thing about single family that I don't think most people realize is that supply and demand only matters if you have a buyer that's capable of buying. Well, in America, no one's capable of buying a home. No one. I mean, maybe you and me, maybe a few other people, but Americans they buy mortgage payments. They buy mortgages. They buy 30-year mortgages that have a house.
Yeah. Yeah.
And so if that gets screwed up, which I think it will, SVB, the other bank, Signature, and then I think Credit Suisse is done too. And these are just the first ones. The rest of them are clinging to life. But if we have a banking problem, tell me how much house you can afford if the bank won't give you a loan. It's irrelevant.
Yeah.
Supply and demand is irrelevant. It doesn't matter. Um, but again, that's predicated on me thinking that we'll have a natural bank collapse where bad banks will go out of business. The government might say, no, they're not going to go out of business. In fact, they're all going to get bailed out and everyone's going to get a home loan, no matter how bad this recession is. Everyone can buy a home, nothing down, 2%. Well, that changes it again. So
Yeah.
as you see, it's hard to
Yeah,
predict.
there's so many variables that go
Yeah,
in, and and then now there's talks of 40-year mortgages, and I don't know, there's FHA came out with a 40-year mortgage option. It's very, very specific, so it's not like open at large. And I forget the parameters, but there's that. Stated income loans were peeking their head
yeah,
during the pandemic, and like, hey, at 6%, and if they need to stimulate the housing industry, does that come back? I mean, I don't know. Do we get subprime again? I don't know. It's weird, but at the end of the day, if you buy in market fundamentals as an investor, if you're buying on market fundamentals, strong historical markets with good job growth, good population growth, quality housing, and you've got your margin
fixed
for debt
debt.
coverage ratio, fixed
You got
debt,
fixed debt.
fixed debt, or on the commercial side, you're buying rate caps, and you're doing that, and then you manage properly, you should be okay long term.
I think so. If you can manage the debt, you can almost buy any
The
time. And
debt's really that's the problem today. It's
yeah,
the debt. If
it
it's
is.
all debt management, getting the
Yeah.
debt to work. I really think the greatest opportunities for investors over the next several years is going to be sub two. Like, man, you can get a sub two, at 2.75%. It's not hard to rent that house.
I agree.
So I'd imagine those are going to be coming back. That's how I bought my first few houses. They were sub
Yeah.
two.
Yeah.
Now they were sub two at 9%. And I still rented them out.
Yeah, absolutely.
uh,
They still work.
yeah. Okay. Kind of last questions here. You've transitioned your grit, or not transitioned, but you've moved your grit into outside of real estate activities, i.e., mountain biking and also flying.
Yes.
Which is harder? Pushing through the physical pain of like a brutal mountain bike trail, or running a successful business through these trials?
Oh gosh, it's that's a good comparison. One is, mountain biking is very intense pain that is condensed down into a very short time period.
And
It
there's an
doesn't.
end.
Yeah, yeah, yeah. You know exactly when the end is coming, and it doesn't require a lot of mental anguish. It's mostly physical. But running a business is mostly mental, very little physical, and it's unpredictable and it lasts forever. So which one's worse? Oh, I couldn't tell you. I'd say the physical pain of mountain biking is probably worse. But hey, when you get sued by your business partner and you've got an employee that's spying on you, trying to help your business partner put you out of business in the middle of an IRS audit, that's pretty tough mentally. So I don't know. And I've been through all that stuff. I've had every
Yeah,
weird
yeah.
situation you can imagine. Um, but business tends to be like like the waves in an ocean. They come and go, and there's a lot of low times where things like right now, I've got things on autopilot. Things are just sweet. Everything's working. So I'd say right now, mountain biking is significantly more difficult, or at least competing in mountain biking is a lot more difficult than my real estate.
Love it, love it. Anything else on those two activities, flying and mountain biking, you want to share before we close it out?
Yeah, get a pilot's license. It was the best thing I ever did. I started about 4 years ago with my friend Carlos in the apartment industry, and he took me to go fly a glider one time. Then he talked me into going to ground school to get our private license. Wound up going to the ground school, wound up taking lessons, loved it, got the license, wound up buying a little aerobatic airplane that's just an absolute hoot to fly. I can get to Austin in 45 minutes. I can get to Denver in 5 hours. It cuts your drive time down into about a quarter or a third. Not to mention, it's just so stinking fun. I
Yeah,
mean,
yeah, it's fun.
the view of flying an airplane over the lake and doing loops and rolls and just having fun. It's an amazing thing. And it really works the mind. I find like being a pilot keeps my mind sharp because there's so much thinking involved
Yep.
in aviation. And so that correlates really well with business because you're using that same analytical muscle. You're having to control your emotions.
Yeah.
You're having to tamp down that fear and look at the logic behind, think of the principles. What am I doing here? I know it's scary, but it's fine because I know this is going to work. It's the same as business. You're having to push through the fear and do something that your brain is telling you this looks bad.
Yeah,
And
yeah,
it's the
because
right thing to
yeah,
do.
especially if you're VFR, like there's no real autopilot. Like I mean, you got to be there. You got to be there, listening to the radio and kind of changing, making adjustments to your course
Yeah.
along the way, and
I'm
also,
actually, speaking of VFR, I'm actually studying right now for my IFR
yeah,
because the big letdown of getting an airplane, people always say, oh, you get a pilot's license. Well, we should go fly to New York or something. Me, you, and three other guys. I'm like, do you want me to tell you the 100 reasons why we can't, or do you want me to just tell you now? One, that's too much weight in the airplane. Two, we'd have to stop for gas every 3 hours. Three, I don't know what the weather's going to be like in a week. We might not be able to fly home. Are you cool staying there until the way?
yeah, yeah,
You
yeah,
know,
yeah,
I got so tired of all that that I finally decided that I was going to get my instrument rating so that I could fly in about 95% of all weather conditions with the instrument rating. You can go through clouds, you can go through overcast, you can go through small storm or small rain showers that are
yeah,
not, big storms. And so I'm working on that now so that I can expand my horizons. And I can't tell you how many times I've flown out of town. And then when I go to come home, it's, clouds at 1,000 feet. I'm like, crap, I can't get out of here. I got to stay
yeah,
for
yeah. Texas
2 or 3 days
storms.
until it goes away.
Yeah,
You don't think about, but
all until you get your Gulfstream.
well, that's yeah, saving up for that, right? Just 80 more million to go.
All right, closing out. Got a few questions. We asked everyone these same questions. Starting out, if you could give your 20-year-old self advice, what would that be?
Oh gosh, my 20-year-old self. The advice I'd give my 20-year-old self would be to learn to think more critically, learn to be more analytic, learn to determine what's true and what's not true, learn to determine what feels good from what is good.
All right. What book or books have greatly influenced your life?
I mean, Rich Dad, Poor Dad, everyone says that, but it's so true. Think and Grow Rich, so true. And then another book that I really liked was called The Body Fat Solution by Tim Venuto. And that one teaches you all of the math behind being fat or skinny.
Mm-hmm.
Most people don't realize it's just all math. And I was a fat boy most of my life, and then eventually lost the weight. And Tom Venuto's book was a really good one. It teaches you all the numbers and how if you just know your numbers, you can stop being fat and you can be in great shape. And so that book changed my life for the fitness side of it for sure.
Yeah, interesting, interesting. In the
Yeah.
last 5 years, what new belief, behavior, or habit has most improved your life?
Oh gosh. In the last 5 years, I've changed a lot of views. And say the question again for me.
What new belief, behavior, or habit has most improved your life?
I think the belief and the habit that I've adopted recently is to compete against myself, to envision, the guy who was the quarterback in high school, who had all the grades, had all the ladies, he was the best on the team. And just picture that guy alongside me every day. He's going to wake up a little earlier. He's going to get dressed a little quicker. He's not going to forget to brush his teeth. He's not going to forget to take the trash out. He's going to go run 5 miles even though it's raining. And always think of that guy. When I leave the office and it's 8 o'clock at night, and I've been there since 8 o'clock in the morning, and I think to myself, I'm tired. I should just go home. I'm not going to work out. That guy would laugh at me. You're tired. You had meetings. I'm going to the gym anyway, loser. And I can't stand when that guy wins. So the habits are to compete with myself, to constantly envision this guy who's doing everything better than he's just doing everything 10% better. To always think of that guy, because if you think like that over a few years, you'll look back, your life will have changed. You won't
100%.
recognize yourself. You'll
Yeah,
be a
like
whole different man.
yeah, little David Goggins behind you.
Yeah.
How can people reach out to you?
Oh gosh, Facebook's probably one of the best ways. Chris Funk on Facebook. Um, yeah, just hit me up on Facebook, or email is quick, QUICK 771 at gmail.com. Feel free to reach out.
Awesome. Well, it's been a true pleasure. Appreciate you coming on, and look forward to seeing you again soon.
Thanks for having me. I enjoyed it.
Thanks for tuning in. If you got any value out of this at all, please like, comment, subscribe, follow. I'd love to hear from you. And for more real estate related content, market observations, upcoming events, you can go to investedx.com and subscribe to our weekly newsletter. I promise you won't regret it. Thanks again.